Looks like we are live. Welcome to the second episode of our product series. We have a name for our podcast now, which is Product Espresso. Two things we both enjoy talking about. We can have hour-long conversations about product, building products, product management, as well as our love for coffee. So, Product Espresso is the official name of our podcast.
Yeah, I'm so excited for our second episode. We finally have a name, and we also have a few listeners now. Not too many, but we have a few. But just going back to the podcast name, I know like the origin story is so simple. Like there's nothing too deep about it. We both like product and we both like espresso. But after you suggested the name, I thought it is a good name because what we want to do with this podcast is really take like these topics and buzzwords and apply some critical thinking and research pressure on them and hopefully deliver something of value to our audience. So I think the name works.
For sure. And to our listeners, we would love any feedback. If you are a shy individual like I am, feel free to DM me or Mohit. If you don't want to publicly comment on anything we share, we would love to know the few seconds that you have heard or a few minutes, what you liked, what you didn't like about either the topic or the quality of the podcast. According to YouTube, we have about 20 folks that have watched the first episode. So thank you for that. And we would love to hear from you. But maybe we should introduce ourselves a little bit more so people can get to know us, share our backgrounds, and that way we can add some more context to the conversations that we'll have. So I'll start us off. My name is Shivam, so you can at least relate who I am as you continue listening once we go on an audio-only platform. Right now, it's just on YouTube. But by background, product management for over a decade. My academic degrees were in engineering, so I started off as an engineer, and that's where I learned about product management as a profession, and I switched to it because I liked the idea of being closer to the problem, closer to the customer, as well as the cross-team collaboration that comes in the role itself. And all of those 10 plus years have been in the fintech space, which is part of the reason we chose to talk about fintech as a topic for the first few episodes. This podcast will be about product management, not just product and fintech, but we're starting with fintech as a series. So tell us more about you, Mohit.
Thanks. I learned a couple of things that I didn't know about you right then. So it's great. Now that our podcast has been listened to for like a few billion nanoseconds, I think it's a great idea that we do like introduce ourselves beyond our name. So I'm Mohit, and in the last decade or so, I've been an engineer, a founder, a product manager, and a product consultant. And what's more relevant for this podcast is I love product management and I love technology. And one of the technologies I like is financial technologies. So yeah, I think it makes sense that fintech being the topic that we bonded on, that we spend a couple of episodes on this topic.
Sure. And then on that, we can introduce the topic for today's discussion. It's embedded finance. If you work in the banking sector or in the fintech space, which are two industries, even though they seem to be similar from the outside, you would have heard about embedded finance. It's a topic that's in every conference. There's a lot of online articles, videos about it. And we'll share our findings from our own research, but also from our own experience, like what it is, what are the different keywords that we will talk about in embedded finance, as well as where things are heading. So first, let's maybe just talk about like why we chose this topic out of like thousands of other topics in the fintechs that we could have picked. So do you want to maybe share thoughts on more like why you thought this would be a good idea to discuss?
Yeah, I think for me, the reason is that embedded finance is a buzzword. And that's something we want to do on our podcast. We want to cover buzzwords and make them useful again. And when doing a bit of research, I went down a little bit of a rabbit hole on what buzzwords really are. And there are two key traits. One is that they're usually some form of technical jargon. So that's how they start. It's a term which is used by a limited set of professionals in an industry to be able to better communicate with each other. And what happens is sometimes these terms become very popular. They become fashionable. So fashionable is the other key trait of getting a term to become a buzzword. And what happens with that is you get a lot more people using that term and using them in contexts which doesn't quite fit. It feels like it does, but usually that term talks about something very specific. And the more people use it, the more it starts applying to broader meanings. And so, counterintuitively, that jargon, which was meant to make communication more succinct and effective, when it becomes a buzzword, it becomes less effective. So, communication worsens. So, that's something we want to do with embedded finance today. We want to take it from a buzzword to something which our listeners can use and know exactly what it means when they use it in certain contexts.
Yeah, just one comment as you were talking about buzzwords and like what their purpose was for like what ends up happening. Just reminded me of the fact like I have this like mixed relationship or mixed feelings about quotes. Like there are some quotes I like and I'm like they're powerful, but then there are times when just knowing what the code is doesn't really help me because I'm missing the context. I don't know what that means, what the meaning behind it, like how to apply it. So it's a bit of a mixed feeling where sometimes I'm like it's a powerful code, but other times like sounds good, but is that actually applicable? Maybe, maybe not. But we can come back to the actual topic.
Yeah, I totally agree. I think you can find a quote to back up any argument.
That's true.
And I think that's been a pet peeve of mine.
Yeah, so I think for us, like in addition to like explaining what that is, like we've also seen that embedded finance as a market has been growing over the last 5 to 10 years, and there is significant growth that's going to happen in the next decade as well. There are different stats available depending on how embedded finance as a market is defined. But just to give you one example, like currently the market size is around $200 billion, and it's expected to grow to 1 trillion in the next 10 years. So it's a 5x growth that's going to happen. The numbers may differ depending on what you find online, but it's a growing market. And it also is a good topic based on the purpose of our podcast, which is just like demystifying information out there. And both of us also have first-hand experience in the fintech space, and we got to work in embedded finance products. Personally, I've been in consumer lending as well as SMB lending. And during my time in SMB lending, I built something that I didn't know was embedded finance. I was just working on an opportunity with a strategic partner, and I saw the impact that it had, where we were able to like create a seamless experience for the end consumers in partnership between a non-fintech company and a fintech company. Because I was at a fintech company, we saw that it was improving the customer experience, and behind the scenes we were able to like move the data from one company to another with their consent, with following regulations in place. But what that led to was better conversions for us. It led to providing customers some additional offerings that they may not have been able to access. And for us as a lender, it was getting us better conversions. And of course, for the partner we had, they were also able to like take advantage of it. So it was like a win-win for all three parties: the end consumer, our strategic partner, which was a non-fit financial company, and for a fintech lender. And I think that was the introduction for me. And I've seen that happen, just like I've seen those trends in embedded finance across the industry. And I know for me personally, I just was drawn to the idea of the innovation that's possible, and the better experience it can provide to the end consumers. And it was just one of those things I just felt convinced about, that hey, this is where the industry is heading. This is something that I am personally excited about working, and I would often find myself bringing this into conversations with executives, just trying to understand like what they are envisioning in this space, and then when and how will we able to like take advantage of it. So I think it was like even the personal experience and the conviction I've built over time that I figured it could be a good topic to discuss. But maybe we should define like what embedded finance is.
Yeah, but you know what's crazy? I had such a similar experience as you, because the first time I heard of embedded finance was also when I was working on a product, and it was a open banking product which helped people connect their bank accounts and seamlessly share their transactions with the company. And we did a whole bunch of credit risk analysis on those transactions. And I remember the entire company began talking about embedded finance. And I remember hearing the term and not knowing what really it meant. But then when I did a bit of research, it turns out the product I was building was an embedded finance product. So I think a lot of people in this industry have probably had similar experiences where they had no idea that the product that they were building would actually fall under the category of embedded finance. Companies were building it without knowing that they're really building embedded finance products. So be interesting to hear if other people have had similar experiences working on a product, not knowing it's embedded finance, and later on coming to realize that that's what it is. But yeah, it's high time we try to decipher what embedded finance really is. Obviously, we did research this, and I think we have a good grasp of what it takes to call something embedded. The key aspects at the core of embedded finance are three. There's non-financial companies offering financial services, and then there is seamless integration. So non-financial companies offering seamless financial services within their customer journeys. And the third trait, which kind of relates to the first two and makes it possible, is the bank comes to you in one seamless journey. When you need the financial service provider or the bank comes to you and provides you that service.
Yeah, and there are like many examples of it. Like even if you don't work in fintech, you would have used this without even realizing that you're using this like embedded finance experience. Buy now, pay later is a great example where oftentimes at checkout, you will be given the option to finance the purchase that you're making. And with a few simple clicks, you are going through the process of splitting your large payment into different installments. You're essentially taking a loan for that purchase, and sometimes it's like 0% APR. But what's happening is you're going through an experience that is something you would not have been able to do a couple of years ago, and you would maybe go to the bank for financing, get those finances, then come back and make the purchase. But now with the embedded finance, that process is very simplified for you. Of course, there's a lot happening behind the scenes. Another example that I read about is like the Starbucks app, for instance. It's a great coffee chain. I personally don't like their coffee, but if you look at like the technology that they've built, you can go into the app and you can reload your Starbucks card with balance without actually leaving the app. So you're within the app. If you want to add more funds, you can choose between a Venmo payment or a credit card. Once you add money to your card, what happens is you're adding funds to your debit card that's meant just to be used exclusively for Starbucks. So as a consumer, you don't realize like the extent of it, but over time, Starbucks is a bank that sells coffee because there have been years where they have over $1 billion in prepaid credit card deposits, and they can take that money, invest it, and actually grow it. Typically, what a bank does. There are plenty of examples we shared, two common ones that people would have experienced. I'll give it to you, see if you have any examples, or if we should talk about like the history and the evolution of embedded finance.
So I think examples are a great way to show what we're talking about. Because, like you said, a lot of people would have encountered embedded finance without knowing that's what it is. And I think the one thing to realize is there are many types of embedded finance, and you could segment it on the basis of how you would segment financial services in general. So you have embedded lending, you have embedded payments, embedded banking, embedded insurance. So any financial service which can be provided in a non-embedded way can in general be embedded as well. But coming to examples, I think we've given a couple of examples of embedded payments, and embedded lending's most popular example is buy now, pay later. Right? I'm sure we're aware of a few apps that work in that space. But a few other interesting examples I came across. One is DoorDash. DoorDash has something called Dasher Direct account on their Dasher app for the delivery workers. And that's an example of embedded banking because Dasher Direct provides all kinds of banking services from within the Dasher app. And I'm sure they have a lot of partnerships with fintech companies to make that happen. But another one, within the same app, they have an embedded payments offering where they provide prepaid virtual cards to their Dashers to enable them to make payments. So there's so much embedded finance in just the DoorDash Dasher application. We can also think about examples for embedded insurance. And some of them, we don't even stop to realize that that's what it is. When we're booking air tickets, there's often insurance options just in the journey of booking that ticket. There's probably a small question saying, hey, do you want to add on a bit of travel insurance, baggage delay, or lost baggage policy to this? And it's so easy. In a couple of clicks, couple of taps, you're able to add that and check out. Airbnb has an interesting embedded insurance product called Air Cover. That's something which I wasn't aware of. And it's again such a seamless insurance experience for Airbnb hosts. So knowing those three traits, that it's a financial service that's been embedded seamlessly into a non-financial service where the bank comes to you. And with these examples, I think what embedded finance is should be clear. But I think it's also important to touch upon what's not embedded finance. There are some things which you could think fall under embedded finance, and you could use the phrase for it, and that's what creates the whole problem of it becoming a buzzword. But there's a bit of gray area in this. So I want to know what you think, Shivam. I would not keep fintech to fintech partnerships in embedded finance unless that financial service is really far from the core offering of the other financial service provider. For example, Wealth Simple offering virtual cards in their cash account has been done with a partnership with Toho. And I'm not sure, would you call that embedded finance?
So technically speaking, it is not, because embedded finance is typically you're embedding the financial service in the non-financial offering to the customers, but there can be benefit if you're following the traits, because at the end of the day, you are simplifying something for the end consumer. And if that's the outcome that you're getting, and if you're following the same approach, the same mindset, the same principles, then yes, it doesn't fit the definition, but at least you are seeing improvement in the offerings for the end consumer.
That's a good point. And this is another thing we'd like to hear from our listeners, because there's a bit of nuance here. And in general, I think if a financial service or financial technology company is expanding their offerings, they're doing some form of horizontal integration or vertical integration and offering a new product within their same application, I think it would be a stretch to call that embedded finance, even though it might be done in a partnership model. But yeah, we'd love to hear other opinions on this.
Another way to think about that more is that if I take a step back, so if you look at the evolution of embedded finance, one trait was that consumer preferences were changing. Customers prefer ease and convenience, regardless of what they're using. So the same is happening in financial services. With the tech companies, they had to learn the financial side of things to build a financial product. For example, like a peer-to-peer payment or like an expense tracking. Now, banks were starting to do the same thing. They know how the financial products work, but let us figure out how do we digitize things. So, in a way, like both sides were reinventing the wheel to an extent. And what the solution to that was, we can leverage each other and we can be more agile, we can be faster and cheaper if we are able to partner together. And that's where embedding the financial product, which could be a banking product, into a non-financial, say an e-commerce. We're maybe simplifying it to an extent, but the idea is like this a multi-layered thing, and each company is owning part of it. Now, in the event that you have a financial product embedded in the financial product, then you get into the details of the value chain where the handoff is happening. But at the end of the day, you are able to address a problem that a consumer is facing.
That's actually a great way to look at it. And you talked a little bit about how it came about, the history of embedded finance. And I think it's really important to talk about where it came from and how did this start. But before we get to the history, I do want to cover a few stats because we are interested in this, but there's a reason our listeners should be interested as well. And what better way to convince someone than give some data, right? So we found a few stats. In fact, we found a lot of stats. It was difficult to pick just a few, but here's something interesting. The global embedded finance payment volume is projected to surpass 6 trillion euros this year, which is an insane number. Also, by next year in the US, 10% of all financial transactions will be embedded finance transactions. That's crazy, right?
Yeah. I don't know if you felt this, but I was doing research and we came across a lot of numbers, and some would be like, hey, in the year 2030, this so and so will happen, this will happen into 2050. And it hit me like 2030 is like 5 years away. It's going to happen before I even know it. I think it was just a reminder to myself, I'm getting old.
Yeah, I can relate. When I read 2026. It was surprising that that's next year.
Yeah.
But I think our next segment is going to be on the history of embedded finance. And I just want to say, doing some research on this, we found some really fantastic examples of finance like 100 years ago. Obviously, buy now, pay later is a very large part of embedded finance today. So, an interesting fact on the history of BNPL, there's this company which made sewing machines called Singer Sewing Machines Company. And back in the 1800s, they were a pioneer in offering financing options for their sewing machines. So it's one of those companies which really pushed things forward. But I think when we talk about embedded finance, most of the sources, including the Investopedia article on the topic, they all talk about auto dealers. And financing options provided by auto dealers was the first example of embedded finance.
Yeah, auto financing is a big space, and I think I was talking to someone a couple of days ago where this came up again. But you reminded me of a book that I'm reading right now, *Sapiens* by Noah Harari. Have you read that?
I have not read it, but I know it's a
Yeah.
really popular book. My dad has read it, and he told me some stories from the book.
It's a great book. I would highly recommend. I think you get to learn not just about like what happened in the history, but also like how things evolved. Like he does a great job of just like explaining how common beliefs lead to like big changes, which if you think about it, like yes, we're talking about embedded finance, for instance, it's a combination of things that's happening. We have consumer preferences changing, you have more technical advancements, and then you also have regulations that enable this to happen. So when you see a giant wave happening, it's because collectively everyone believes in this one thing or in this one imagination. And he gives a lot of examples of that, and plenty of other things too that I found very interesting in the book. So I would highly recommend it.
Noted. I'm going to read that before our next episode about that. In the, what was it, 1920s, Ford established this embedded lending program for car buyers. But then it rapidly evolved. And I think we have to jump to the 90s and the 2000s for the next wave of advancement in embedded finance. There were a couple of key technologies. One, APIs, and you also need advanced algorithms. But on APIs, one event which really pushed forward the age of APIs was this API mandate by Jeff Bezos in the year 2002. And it's one of those legendary events which you're not sure how true it really is. But if this incident is true, what happened was Jeff Bezos issued a notice to all Amazon employees: stop what you're working on and evaluate whether you have an API. If you do not have an API, build one. There is some conflicting information out there, but it's one of those events which is super interesting to read about. And that really started the conversation on how important APIs are. And that brought about this revolution that we're seeing. The other was the algorithms. To really have that seamless integration, you need that real time, say, credit risk assessment to enable embedded lending. And you had these technologies being developed and becoming popular on one hand. And on the other hand, you had some non-technological changes, one of them being how comfortable people became with letting technologies make decisions. Traditionally, I think in the 90s, early 90s, I don't think there were a lot of decisions, especially financial decisions, being made without a human in the loop. But I think late 90s, 2000s, and towards the late 2000s, I think people became just really comfortable with letting an algorithm make a decision and just going with it without a human in the process.
Yeah, I think all three are very important. The technological advancements being API first, algorithms, as well as seeing that consumers are becoming more comfortable with online only decisions. And this can be a good segue into talking about like with embedded finance, like how can builders, and that could be a product manager, an engineer, or a founder in the fintech space, take advantage of embedded finance.
Yes, that's our next segment. And before we get to that segment, a quick shout out to our sponsors, right?
For sure,
Just
we got to do that.
just kidding. Just kidding. We have no sponsors, but soon, one day.
But we're willing to take applications.
Yes.
Maybe that can be something we also focus on. How, as a the product market, they say like your product is only successful once you have buying customers. We should think about our KPIs for a podcast, both in terms of viewers, but also when we can actually start to get sponsors.
That would be some great validation for this podcast.
For sure. So I'll
So,
start with a few points on how, as a builder, again, regardless of where you are in the build life cycle, how you can take advantage of it. So one thing I'd say is think about building ecosystems. How can you create a one-stop shop for your consumers? We know that all-in-one experiences are valued, and you see more and more of that happening across many, many verticals. Because if you can have seamless integration, if you can build technologies that allow data to flow through easily, you are going to create something that can increase customer engagement. It can lead to more retention. And one example that I'll give is Toast, which is a point of sale system for restaurants. Initially, it was only meant to make operations easier for restaurants, and then it evolved to accepting reservations, making sure they can process payments, allowing restaurants to like have inventory. And over time, what started happening is because Toast had a good insight into like the transactions that a restaurant is going through, they built this product called Toast Capital, which was essentially financing for restaurants. So and that has become a big revenue generator for Toast as a company. And if you and it's helping the business as well, because as a small business owner who runs a restaurant, I'm using Toast not just for tracking my sales, not just to like process payments, but in case I need to get access to financing, say I need more inventory or I need to expand my operations, I can get that easily from Toast. Think for the entire ecosystem.
yes. And just keeping in mind that becoming an embedded player is a very powerful strategy, especially when you're building a new product. I think just thinking about becoming an embedded finance company first, maybe we can call that the embedded first strategy to building a new product. That has a number of benefits over the traditional route where you have to build a brand, create some trust with customers. And one of the blind spots usually that new fintech founders have is they're very focused on the product, but they overlook distribution. That's one thing which can really kill a startup. You have a fantastic product, you have great technology, but you're missing that distribution piece. And I know it's easier said than done, but if you were to come up with a strategy in which you could just focus on your product and your technology, which founders are really good at, and bed your offering into a company's journey, which already has that brand trust with consumers, which already has a number of customers already on their platform. It just takes a distribution from 0 to 1 very quickly, and you don't have to worry about creating a brand, right? I'm sure that's what Affirm did as well. When I was reading a bit of the history of NPL and Affirm as a company, I think what they did was they just focused on embedding themselves with Shopify in Shopify's checkout journey. So the key is think about, and we're coining this term perhaps, but think about an embedded first strategy. It works really well with the idea of having a niche and a focus as well, which is usually great for a startup. And so all you have to do initially is think about having banking as a service offering and just building that out. And me saying banking as a service would probably have opened up a whole can of worms. There's a whole debate out there on banking as a service versus embedded finance. But luckily for our listeners, I think you should have done some research and can give us a good idea of the differences between banking as a service and embedded finance.
Yeah, I like embedded first strategy. Even though a company may not have started with that, I'm sure a lot of companies have that as their strategy for the next 3 to 5 years, because it's something that you have to think about as a way to expand offerings, as a way to retain your customers and create that stickier customer experience. But yeah, banking as a service is a component of embedded finance. Where we can go easily go wrong is if we use the term embedded finance and banking as a service interchangeably. We have done a good job of defining embedded finance and shared many examples. But banking as a service is essentially a licensed bank thinking about how they can package a service that can be offered to non-banking companies. So this is more about financial companies figuring out how they can build the APIs that you talked about, Mohit, and how they can utilize the license they have to work with these non-financial companies, because in addition to making the experience easier by integration, licensing is a very difficult piece that you can gain in the financial sector, and banks have that advantage. Banks know their financial products, they have the license. If they can work with a non-banking company as a banking as a service, it can allow them to really expand their offerings beyond the customers of the bank. So a common example, I know you gave the example of DoorDash offering financing for their drivers. I don't know if this is what DoorDash does, but one way to think about is you have a DoorDash driver who is a contractor of DoorDash in this example. They use DoorDash to earn some money. Now, DoorDash can work with a bank behind the scenes, and they can work with the bank that can take care of the underwriting as well as getting the financing to provide to the dasher. And that's where, if a bank has that banking as a service package where that makes it easier for them to work with DoorDash, they are opening themselves to new business and new revenue opportunities. Now, there are certain similarities between the two. Both of them aim of like making financial services easier. They're trying to figure out technical integration, but the difference is essentially in what they're offering, in what the scope is. We can maybe look at delivery examples again. Think about a restaurant versus a DoorDash. A restaurant has the core idea of focusing on the food, what to offer to the customer, the different courses, whereas a delivery company is thinking about how do I optimize the delivery of the food to be made. In a way, embedded finance is the entire experience for the customers where they can order the food, they can choose the restaurant, and the restaurant is thinking about restaurant as a service. And that's where you can draw a similar analogy to banking as a service, because the restaurant has to choose a delivery partner and figure out like how the delivery would work. They may have to think of different counters, they have to make for food and whatnot.
That's a great explainer. And my takeaways there are, and correct me if I'm wrong, is one, banking as a service is a part of embedded finance. Embedded finance is the bigger picture, and banking as a service is a key component of the ecosystem which enables embedded finance. And I know we found a really great article from Alloy on understanding embedded finance, and that talks about like these layers. And I think that's what you were alluding to as well, where to make embedded finance possible, you have to have that bank, that regulated entity, which is going to do, say, the underwriting in case of embedded lending. But they need this banking as a service stack on top of their core underwriting processes, which can then enable them to embed themselves into the third layer, which is the end consumer facing company.
Yeah. The three layers you defined, you have the consumer, you have the platform, and then you have the bank. Sometimes that bank layer, the third layer, could be divided into two additional layers. Stripe is a great example there, where Stripe is often across the board, they're known for checkout, but behind the scenes, they would work with different regulated bank entities. Again, Stripe has to comply with their own regulations, but that banking license would be the fourth layer. So I think instead of three layers, you will have a consumer, you would have a software platform, then you would have a financial services enabler, which is Stripe, and then you would have a regulated entity, for example, like a Wells Fargo or a PNC or a Chase. I don't know like who all Stripe works with, but just wanted to mention that there could be multiple layers depending on what the partnership or what the value chain looks like.
Yeah, it's great that you mentioned value chains, because that's key to understanding this, right? There's a whole ecosystem, multiple players, and it's almost like this value chain or the supply chain of different companies offering different things to enable this broader concept of embedded finance and make it possible. But yeah, that was a great segment on how should people building new products in the fintech space think about leveraging embedded finance. And our last segment is going to be on the future, where is this going? Where are we headed? But before that, I told you before the podcast that I have an embedded finance joke. And unfortunately, I leaked it to you before. So you might not find it so funny anymore. But
To be
I
to,
still
to be
want to,
honest, if I think too much about it, I think I'll remember it. But at this specific second, I don't remember the joke. So, so I think
this is
it'll
worse.
land well.
Because I could not find a different joke. It was so hard. Like there's very little humor in the embedded finance space. Let me just put it that way. But this, by the way, is a try not to laugh challenge. So try your hardest not to laugh. I don't think it'll be too hard. Why did the embedded finance API break up with the e-commerce app? It's because the relationship felt transactional.
I feel with these, you need to have a good comeback, and I don't. But I would say that's a good joke. That's a very good one.
All right. So our last segment is where is this going? What's the future here?
Yeah, you're going to see more competition. Like I've already seen disruption in the traditional banking space happening at a global scale. Like it's happening in all countries at different like maturity levels. But you're going to continue to see competition heating up, and the territories that were defined by the banks are no longer there. Like there are banks that are focusing on technology, there are tech companies that are focusing on fintech, and you're going to see more and more of that. But you'll also see more partnerships because you will have more collaborations. We talked about a couple examples. These partnerships will be between tech companies and financial firms. You may see partnerships between tech companies and fintech companies. And you may also see partnerships within like fintech to fintech company as well, even though that doesn't typically fit the traditional definition of embedded finance. But I expect more competition, also more partnerships. So it's just like the way we do banking and the way we use financial services will change drastically in the next 5 to 10 years.
I was watching an interview of the CEO of Marqeta, and he had some fantastic quotes on where embedded finance is going. And one of the things he said was, what we're going to see is the banking system disappear. Not in the sense that it's going nowhere, but in the sense that it's going to be everywhere. And it's not going to be everywhere in the sense of like a jack in the box showing up in unexpected places, but it's going to show up exactly where you need it and when you need it. And so I think the banking system is just going to disperse and dissipate into every transaction that we do in our daily lives. And it does bring up ethics versus convenience, that it blurs the line between browsing and purchasing, right? We're already seeing that e-commerce on social media has been done in a way that there's just no friction. There's no time to stop and think. It's just a couple of taps and you just bought what you saw in an influencer's video, right? And maybe a couple of taps and you just bought that latest meme coin. And so that ethics versus convenience conversation is just going to become a bigger topic as embedded finance becomes more popular.
Yeah, as you said, because the lines are blurred, there is both opportunity but also responsibility that we have as builders. Whenever there's room for innovation, it allows you to grow, but you have to think about responsible growth, both in terms of like a growth that's sustainable for the company and it's continuing to benefit the customer. Ethics is going to play an important role as well as government regulations as well. Yeah, I would say if you were to take a look at like embedded finance market, and I know we talked about like there are different subcategories of it. Like we talked about insurance, we talked about payments, lending, and so on. Like I would say that payments will continue to still be the biggest market share in the embedded finance space, followed by lending. But you will see like newer subcategories either become bigger or evolve. Like you talked about insurance tech, so that's insure tech, you have prop tech, and I'm sure there'll be a few more categories evolving as well, but you'll see a lot more activity in payments and lending for sure.
Yeah, and when doing some research on what are these new spaces, one thing that came up was the rise of embedded personal finance. And I think in this segment, we are talking about the future of embedded finance, but I'd also like to maybe put out there what we think the future should be. And even though the trends do not really support this future, I think to have that conversation going and to have some opinions in this space is important. And so I really like that trend of an increase in embedded personal finance. If you could embed expense tracking and budgeting seamlessly into a checkout journey, that would do wonders for limiting the number of transactions which people regret. And I think it's not just all bad for e-commerce applications and websites, in the sense that this is not just going to decrease the number of transactions. I think the way to do it is also have nudges on what purchases can be greenlit and people may not need to feel guilty about. So promote transactions that people can afford. If you have enough disposable income, there should be some way for you to see that you can afford this very safely, whether it's a product or a subscription, that you can make that purchase with confidence that this will not affect any of your financial goals. And so I think that's exactly what the future of e-commerce should be. Better decision making so that there's fewer transactions that people regret and far lower percentage of refunds for the e-commerce companies. And obviously a whole world of benefits to people's financial health.
Yeah, I think this is like similar to what has happened in the wealth management space. Like there are a few companies out there that will tell you that, hey, once you complete your transaction, you can round off that balance and put that as in your savings or future investment. There are, of course, like high yield savings accounts that are digital only, which are offered to customers that have checking accounts as well. And I think banks that offer both, if they have a view into how much funds people have in the checking account, and if they understand what their future goal looks like, they could take that money and invest in a high yield savings account or just like in the market if that money is not needed. So I think some of that is happening offline. Maybe it could happen online in the wealth management space, where I think what you're defining is more about being more thoughtful, helping people be more thoughtful about the purchases that they're making.
Yeah, absolutely. And that would be an example of embedded finance being used for good rather than just increase in capitalism and the volume of transactions. I think that does bring us to the end of today's podcast, and I'm surprised there was so much to talk about. But then again, it's a really popular and important topic with a lot of different facets.
For sure, we can go on maybe for another hour, but no, this was definitely a good chat. To our listeners, that's all for today. Over and out.
Yeah, now we can get back to talking about coffee again.
For sure.